This video is for educational and entertainment use only. The views in this video do not necessarily represent the views or life of Marlon Dixon.
Welcome back to Duffle LO to sit down, and we are on our last article, but I think I got a special article I want to kind of like throw in there. So I might have one more. You guys just wait. So what this article is going to be about is the foreclosure. So now I told you guys about the unemployment, told you guys about the rate hikes, told you guys about how nobody's want to go to work and the unemployment, and they talking about absolute all that stuff that they were saying. To top this all off, foreclosures. Last video, they just said, oh, the prices of the houses are going to keep going up. So if the prices of the houses are going to keep going up, but the interest rates going to keep going up, let's throw this monkey wrench in the party about these foreclosures. So let me share my screen. Because look at this. Foreclosures soared 94%. 94% from 1 year ago. This is why during the moratorium, nobody had to pay their rent, nobody had to pay their mortgage, all this, all that. So you couldn't kick nobody out. So the people that own the property, they probably was getting some incentives and all that stuff, but they still had to kind of like pay their mortgage in a way. But what about those people that couldn't afford their mortgage, or they had to deplete their savings because they had to pay all this mortgage, but they renters was not paying? Now look here, January 8th, 2022. This was yesterday. Foreclosure saw 94% from 1 year ago by Marie Backman. Let's go. When the COVID-19 pandemic first hit and unemployment became rampant, it became clear that many homeowners would risk losing their homes if aid wasn't doled out immediately. The government responded with mortgage forbearance, an option that predates the pandemic, but one that wasn't universally guaranteed. So they allowed people not to pay their mortgage. So now all your payments start going to the back of your mortgage. Instead of you having to pay it right now, it just kept going back, kept going back, kept going back. But in reality, you live in that property, but you still owe all that money that you never paid on your mortgage. You still owed it. The renters, for those that own multiplexes and all that type of stuff, the renters didn't have to pay their mortgage where they rent, but the owners still had to pay their mortgage. So the renters didn't pay, and they was banking on the renters to pay their rent for them to pay their mortgage. They had nothing coming. Under forbearance, mortgage borrowers can hit pause on their home loans payments without penalty. Normally, loan service can approve or deny forbearance requests at will. But during the pandemic, any borrower who requested it had to be approved, and all borrowers had to do was attest to a financial hardship to be granted forbearance, making it pretty much a sure thing. Look, I can't pay this money right now. It's a pandemic. The job closed right now because it wasn't a necessary job. So therefore, I can't pay my mortgage right now. They okay, you got hardship. Those who saw relief under forbearance during the pandemic were allowed to pause their mortgage payment up to 18 months. That's it, only 18 months. But that means borrowers who entered forbearance early on in the pandemic saw that protection run out this past fall. And not shockingly, foreclosure activity has picked up since. You only going to do this for 18 months. So if you're in a property to where you have renters in your investment property and they not paying their rent because they don't have to pay rent, but now you got to pay the mortgage, but they still ain't got to pay the rent. Ooh, see, now people is doing what? They either gonna start selling or they gonna start foreclosing. If they foreclose or they sell, let me throw the monkey wrench in and tell you, there's no way that the property values is going to continuously going up if all these foreclosures and all these properties hit the market at the same time. Why? Supply and demand. When the supply is low, the demand is high, which means the price is high. When the supply is high, the demand is low, which means the price is low. So when they tell you that it's going to get ready and go up, they not putting this in a calculation. People are going to start foreclosing. In November, there were nearly 19,500 U.S. properties with foreclosure filings, according to the ATTOM data. That represents a 94% uptick from a year prior. And as forbearance clock runs out on more borrowers, the number of homes under foreclosure could increase. This is what's getting ready to happen. But they're not trying to talk about it. They talk about the hikes, they talk about the appreciation in the property, but they telling you to look over there when they finna go over there. So the rate hikes, they gonna rate the hikes. They gonna go up on the rates, but they telling you, oh no, it's okay because you're gonna get the appreciation. That's not what's gonna happen. People forgot about the moratorium and the forbearance stuff ended. They forgot about that. Good news for the housing market, huh? The U.S. housing market has been starved for inventory since mid 2020. So everybody ain't got things, places to live, things to buy, all that. They said, oh, we ain't got enough homes built for people to need the type of homes they need. Everybody need affordable housing, and we need some affordable, all this stuff they've been talking. But now look this. Now since it's been starved, is this foreclosure gonna help? The U.S. housing market has been starved for inventory since mid 2020. That's made buying homes a challenge. If foreclosure activity continues to pick up, it could result in more available inventory for prospective buyers. So that's one potential silver lining. That said, buying a foreclosed home can be a riskier prospect than buying a regular one. Often homes in foreclosure have been neglected and aren't in the best shape. But for buyers willing to take on that risk, foreclosed property could spell an opportunity to purchase a home on the relative cheap. That's the whole thing. Now, let me put it together for y'all. The banks have been cutting off people's credit lines, slashing their credit cards, and they're going to go up on the borrowing of the money, right? When they go on a borrowing the money, you're gonna have to meet certain requirements to get that money now because they're gonna become stringent. When they got all these cheap foreclosed properties out there, the people that already got money, 9 times out of 10 is gonna go buy all this up, fix it up, write it off. Thus, they telling you the greatest transfer of wealth in history is about to happen, ladies and gentlemen. They steady telling you that. This is why they telling you this stuff, because all these properties going to foreclosure, the people that have the money is going to buy them on pennies on a dollar. You see how they saying that buyers willing to take that risk could spell an opportunity. If the banks know that this is a foreclosed home, and that's kind of risky, I don't think we want to borrow and loan out money on that right there. I don't think we want to do that. But the rich that already got their money sent to the side, guess what they gonna do? What they gonna do is they already got this money sent to the side. How we go buy these houses, pennies on the dollar, fix them up, write it off. Now we got more investment properties. Now we put some renters in there. Now the renters actually pay the mortgage for the property, but we hold on to the property. So this is a whole game, and they understand what's coming. How to avoid foreclosure. Many borrowers whose mortgages are coming out of forbearance still can't afford their money. They can't afford. So if these people can't afford this stuff, and they study telling y'all that, oh, the employment going down, but where the jobs at? Everybody hiring. So who is at work then? Who at work? If these people can't afford this stuff, who at work? Like, let's really think about this. But that doesn't automatically mean that foreclosure is in the future. Right now, home values are way up on a national level. So borrowers who can't make their mortgage payments may have the option to sell their properties for enough money to pay off their home loans and walk away clean. So now you just gonna basically not owe nothing, not have nothing. That's what they're saying. What's more, many loan servicers these days are taking steps to help struggling borrowers stay in their homes after forbearance runs out. Those who exit forbearance and can't pay can ask about loan modification, where the terms of their mortgages are altered to make those loans more affordable. Refinancing may also be an option for some of the borrowers post-forbearance, and too could result in lower monthly mortgage payments. They want you to refinance because y'all understand they put a fee on that refinance. At first, they weren't paying the fee like that. Now they paying the fee on the refinance. Then they say, oh yeah, we can just tweak your terms and we're gonna make it more affordable by modifying your loan. If you don't understand there's gonna be some fine print in that, you gonna have another thing coming, because they're gonna have some fine print in that to where you gonna just probably just give them the property. Now, if the bank own these homes, who you think the bank gonna sell the homes to? The bank gonna sell the homes to business people that they already have relationships with, aka the rich. So we already got 50 million in your bank. We want to buy 50 million worth of them properties. Okay, but we want to borrow another 100 million to fix all of them up. Okay, they just swap it out. Now they get 50 million worth of properties, and then they get $100 million loan to fix all the properties up. Oh my God, like this stuff is real. The fact that foreclosure numbers have climbed significantly since late 2020 isn't surprising. Back then, borrowers who couldn't pay had forbearance to fall back on, but those who are exiting forbearance now and can't pay aren't necessarily doomed for foreclosure. Struggling homeowners can contact their loan service and see what options are available to them, and that might prevent them from falling behind on payments and facing severe repercussions. So they're saying reach out and see what happens. But a lot of people that can't afford it and ain't gonna have no job because these jobs ain't coming back, they gonna have to either A, sell, or the house will get foreclosed. A historic opportunity to potentially save thousands. Chances are interest rates won't stay put at multi-decade lows for much longer. Rate hike. That's why taking action today is crucial. Whether you're one to refinance and cut your mortgage payment, or you're ready to pull the trigger on a new home purchase, because they need people to start buying the stuff so it won't tank. This is why they try not to allow it to tank. What's this? Oh, it's another article. Matter of fact, I got to do after this. It's literally that's what the article say. They not gonna let it tank. Let's finish this. Then we'll go. Our expert recommends this company to find a low rate, and in the fact use them to we're believers in the golden rule. That's the end of that. They trying to recommend something. So now what I got to do is I got to go find this other article that states that the Fed is not going to let them lose. Like they not like. It's so many mixed messages that's being sent. Yeah, no, wait, no, but yeah, this, except for that. No, but this. What about this? These people I'm gonna tell you what they're gonna do. Because you gotta understand, this is the rich that's playing the game. They're going to raise those rates because they're gonna make more money with the interest rates being higher. The Fed is gonna sell their bonds, which is gonna make the interest rates have to be higher. Listen to what they're doing. They telling you that people are unemployed, but they saying at the same time, unemployment is going down. How is people unemployed and unemployment going down? Foreclosures rose 94%. That's almost a whole 100%. So if it was 100 last year, it was an extra 94 plus that 100 this year. That's 94%. When they raised the rates and people can't afford these loans, which a lot of people can't afford their loans right now. Sorry for those that are losing their homes right now due to foreclosure. You have to understand when the market crashed in 2008, the subprime loans, they giving people loans that they know these people can't afford these loans. They know they can't afford them, but they giving them to them. Years down the line, the people end up losing out on them. And now they out of a home. That's why I'm saying, wipe your hands clean. I just lived in that house for 10 years. I paid all that mortgage. And now I just had to sell a house. And I ain't got nowhere to live. Now I ain't got nowhere to live because I can't afford that house. But if I can't afford that house, how can I afford that one? It's all crazy. Hope you guys learned something. Like, share, subscribe, comment below. Please prosper through adversity. Don't underestimate family, friends, lovers, enemies. Look objectively. No matter what city, state, or country is in, every hood is the same. If ain't nobody told you that they love you today, I'm going to tell you right now because I love you. I'm going to find this last article that says that they not going to let this stuff go down so I could do that because I thought I put this article up here, but I didn't. So it's time for me to find it. I'll be right back. So you guys hold on for the next episode.
This video is for educational and entertainment use only. The views in this video do not necessarily represent the views or life of Marlon Dixon.